Okay, great. Okay, I see we are about to start. Excellent. Thank you all for joining this session. And I mean, a phenomenal work by the Young Leaders Connect. Thank you for the invite and the trust, and always an honor to serve and stay plugged in. My name is Matabelo Mzizi, and I'm currently based in Stockholm. But as you know, technology has removed all the barriers, and we can connect with each other all the time without even thinking of distance. And this is really a perfect example of that. So today we're also going to touch about or talk about financial barriers and also how those can be removed. As I've mentioned, geographic barriers have already been removed completely. I'm excited to be moderating this digital conversation today, focusing on FinTech. And I'd like to cover a few things. One is this session is live, and we of course want the session to be engaging. So please don't be shy. Pop your questions in the chat. I will post them to our esteemed guests throughout the session. And you know, we're millennials, and I'm sure there's Gen Z also on the line. So feel free to post on Instagram, Twitter, Facebook, or LinkedIn. Our handle is at YLC Ideal, and hashtag us digital conversations. And this session also will be recorded. And as I've mentioned, it is live, but we will share the recording, and this will be promoted as an on-demand version for those who might not, or for those who have missed this session. So the topic of today, it is absolutely amazing. It impacts our daily lives. It has shifted how we behave as consumers. FinTech is such a broad topic. It has a broad meaning as well, but it is really a financial technology, which is a term focusing on technological innovation in the financial sector. For an example, think of your online mobile banking app, the wearable payment technologies. But what we've seen throughout the decades is that obviously mobile phones have changed the fintech game completely. Our mobile phones changed their identity from just being a mere simple communication device to now being a wallet or a mobile money or financial device that we also use. And through our mobile phones as well, or through mobile solution, we're able to get quick loans, online payments for small businesses, different models like one here, it's called Klana, where you buy now and you pay later. There's a lot of opportunities in the e-commerce space. But not only that, with FinTech also offers, for an example, farmers convenient ways of getting sources of funding through either crowdfunding and digital payment system. And all these are just like few examples. They all form part of the financial or the FinTech sector. There's actually a recent study that has been done by GSMA, and I'll just point out few numbers that pop up before I introduce our esteemed guest. And one that really popped out for me is that 1 billion there's like 1 billion or 1.2 billion registered mobile money accounts. And out of that, there is 2 billion US dollars processed daily by the mobile money industry. I mean, that is absolutely incredible. And there's 300 million monthly active accounts, and it's an increasing industry. And with that, that's why we have an amazing and phenomenal woman in our midst, who's going to really take us through the fintech space. I'd like to take this opportunity and welcome Miss Yolanda Zoleka Cuba. She's the Chief Digital and FinTech Officer at MTN Group, which is one of the Africa leading telecommunication companies, and where she's charged with leading MTN Group strategic expansion of its financial services and digital solution. And Ms. Yolanda also had served at Vodacom Group as a non-executive director before joining in an executive capacity in November 2014. But amongst incredible accolades of Ms. Yolanda is that in 2007, she became the youngest CEO of JSE listed company, and since she's been recognized as one of the key business leaders in Africa. It's literally an honor to have her. She's got multiple awards. She's been Businesswoman of the Year. One of them, another one being the Youth Excellence Award by the Black Management Forum. So we're literally in for a treat. We've got the best of the best in the industry, so we're in safe hands. One of our next panelists as well is another awesome, phenomenal lady, Lebo Mokgabudi. She's a consultant and a country manager here in South Africa for the Catalyst Fund. Lebo is South African country manager, and which is a global accelerator, a program supporting early stage startup, focusing on inclusive fintech startups that are also offering capital grants. And she's really hands-on in terms of the venture building and connection to investors. Lebo has also lived in Kenya, and which is one of the countries that really is a training ground or leader when it comes to fintech as well. So, like I said, we are in for a treat. I'd like now to just say hi to Miss Yolanda and Miss Lebo. Hi, good evening. Thank you for joining.
Hi.
And thanks for having us.
Thank you for having me.
No, we are absolutely like excited over the moon. So we've got already like 40 to 45 minutes to have this conversation. So let's deep dive into it. Take us through just the fintech landscape in terms of the users, the behaviors, the adoption. What are you guys seeing in the fintech space right now?
Yeah, okay, I'll take that. Maybe just to make a point, I've moved on from Chief Digital and FinTech Officer now to Vice President for Southern and Eastern Africa within MTN Group. So, but I mean, that was my old portfolio. So let me jump into it. I mean, in terms of fintech and the fintech landscape, there's a number of issues that are actually happening, and there are a number of shifts that are happening that are actually helping us actually accelerate the kind of growth that you're starting to see within the fintech space. And maybe the one thing that one needs to always start with is, why did it take us this long, right, to actually see what we're seeing now? And the simple answer is that, we had traditional banks, which over the past 100 years or so, more than 100 years actually were dedicated to about 30% of the population. And basically, and a friend of mine puts it well, he says, sometimes when you deliberately include, you actually unintentionally exclude, right? Yeah. And I think a little bit of that actually happened in terms of financial services, is that the people that no one could understand how to actually deal with their credit ratings or anything like that, they decided to put them aside and actually say, how do we actually deal with the ones that we can understand easier and so on. And basically now, what are the fundamental shifts that have happened? There are a couple of them. The first one is that from a technology perspective, infrastructurally, we've seen fundamental changes. And one doesn't actually realize how fundamental the changes are until you actually go back in time and you realize, hey, actually this wasn't like this. The first one around infrastructure are things like, for example, the cost of processing, right? Right now, the cost of processing, I mean, the marginal cost is almost nothing. So therefore, you can afford to have people that now can give you 2 cents, 5 cents of revenue, whereas before it was not enough to defray of your cost. So if you think about how infrastructurally this has happened, it's the cost of electricity going down, the cost of storage going down, and so on. So you can have volumes and volumes of data that you are processing. I mean, I was talking to a friend of mine and he was saying to me, Yolanda, I mean, like data science has been around, and all these things that we're fussing about right now have been around since the 1950s. However, there was no storage capacity, or it was too expensive to create the storage capacity to be able to do the processing for all that data. So if you look at things like that, Moore's laws actually it still keeps on accelerating. So we actually are seeing a lot of that happen. The second thing that's happening is that we're actually seeing what GSM business actually has done. GSM has actually introduced new ways of doing things and accepting tokenization as a means of actually transferring value. And basically what they've done, what the GSM business has done is basically actually understood that there are people that can only be daily wages, right? So people that throughout the month can have 100 Rand. However, at any one time, they never have 100 Rand. So they said, we're going to actually make sure that you have an environment where you can actually buy for only 50 cents to actually get connected. Because if you remember, so you guys are too young, you won't remember, but when some of us were growing up, there was a house in the township where you would actually have your family calling that house with the phone, and someone else will call the person, and so on and so on. So it was a whole kind of rigmarole on how you connected, and you connected with your family and friends only like once a week or once a month, right?
Yes.
And now you actually do it without thinking like 1,000,000 times a day. And that's what actually the economic models actually started changing to actually demonstrate. So I think that actually caused a lot of change in how we think about our models. And then the third element is around people's behaviors and obviously black swan events. I mean, things like, for example, COVID, other things that have happened. I mean, in Kenya, for example, it was the post-election conflict that actually accelerated mobile money even more, right? Because we're not using the buses and the taxis to move money from the towns into the rural areas back home. So they actually needed a new mechanism. So that actually started accelerating some of the adoption that we saw in Kenya, for example. So there's a lot of things that are happening at the same time from a FinTech perspective. And then obviously we have these innovative young people that are coming up now and they're trying new things. And we are more open to new technology and innovation than we've ever been, I think, in history. Because the rate of innovation today is something that someone who lived like 100 years ago or 50 years ago as a teenager would not be able to accept. Lebo, I don't know, from your side, what are your thoughts?
Sure. So I'm going to take it from the beginning. Hello, everyone. I happen to actually be in Kenya at the moment, but I'll take it from the beginning in terms of where it started in the first place, right? How mobile money started, and then I migrated to FinTech, is that you were in a market where people do not have bank accounts, right? From a Kenya perspective, there was no access to bank accounts, no financial services infrastructure, no ATM or branch landscape in the Kenya context, and mobile money and M-Pesa came and created an innovation to enable people to send money from urban areas to rural areas, enable people to send money and receive money. And the key elements, I think, of mobile money and then FinTech is affordability, accessibility, affordability, and appropriate solutions. Right, so I'll start with accessibility. From an accessibility point of view, M-Pesa and Safaricom created a distribution network in rural areas and in urban areas, created an infrastructure where people could access cash ins and cash out everywhere. So throughout Kenya, in the most rural areas, one is able to withdraw their money as well as receive their money. That's the first thing, accessibility. So accessing financial services from anywhere. And then the other element is affordability and appropriateness. So the services that were first developed was P2P, and then enabling people to pay for services, right? And pay for goods. So in the Kenya context, it started with P2P, and then it migrated to people being able to buy goods with M-Pesa, and then pay for bills with M-Pesa, and then it migrated to receiving your salary payments, even through M-Pesa, right? And government to payments and government payouts through M-Pesa. And I think that was the first layer where it started. And that almost created the distribution throughout the country. I mean, 80% of Kenyans use M-Pesa, whether urban or rural, myself included, right? And to a point where it's become a form of payment where you actually don't need a bank account.
Yeah.
That's where it started. And then it evolved to a place where M-Pesa became the financial services infrastructure that we have, the card landscape in South Africa as an example, right? But it became the financial services infrastructure, and it then evolved to other services, to then enabling people to other verticals such as agriculture, such as health, such as education, to be integrated in those other verticals, enabling smallholder farmers to get access to payments through M-Pesa, enabling people to get paid through M-Pesa, right? And that's the appropriate part. It's embedding it in the wallet of a low-income consumer. What are they already doing with money, right? And where do they play? And another key element of digital financial services generally, or FinTech, is that it must solve a problem. And just to make that point, to whoever's listening, is that it must solve a problem. And the problem being solved is accessibility and appropriate solutions, right? And affordable solutions. And then it evolved to then going into agriculture, into those different services. But now it's evolved to a point of view where it's embedded finance in other sectors. So that was your question, was what's happening in the FinTech space. I'll now go to South Africa. South Africa, very different landscape. Everybody has a bank account, 80% banked market. There are banks everywhere, there are branches everywhere, there are ATMs everywhere, right? So the issue in South Africa is not accessibility. Access has actually been solved. Access to bank accounts has been solved. The challenge in South Africa is affordability and appropriate solutions. The cost of financial services is really high, right? Especially for the low-income consumer. We all know the cost of withdrawals is high, right? The cost of sending money is high. And what you find in South Africa, especially from a low-income consumer market, is that people receive their salaries or money in their bank account and then withdraw it all. That's generally the case in South Africa, especially the low-income consumer from an inclusion point of view. They withdraw all their funds, they continue having a cash economy, withdraw their funds and then go to, and pay for services and pay for things using cash, right? And in South Africa, we still, where it's evolving to, or digital financial services evolving to, is developing appropriate solutions and affordable solutions. And what do I mean by that? Now we're at a place where, yes, it's about rebuilding the country, right? And it's evolved from enabling payment solutions, because that's not a problem in South Africa, but evolving to a point of enabling financial resilience. No longer talking about inclusion and access, but financial resilience. A point where enabling small businesses to access credit, enabling small businesses to access insurance, and enabling the gig economy, plumbers, workers, to access financial services, right? And that resilience element. I mean, another step back, if you think you and I, right, or people in this forum, why do you have a bank account? Initially, the reason you have a bank account is to grow as a person, grow in your household, and then grow as a business, right? You have a bank account so it can be a store of value where you receive your money, and then get savings, grow your income, get more money, get a house, get a car, get access to credit to get those things. That's the foundation of financial services, right? The only reason any of us have a bank account is to receive our funds from wherever they come from, and then a capacity to grow, right? Grow our income in one way or another, whether an individual or a small business. So digital financial services or FinTech solutions need to build for the capacity to enable people to grow, enable people to get access to credit, to grow their businesses, or grow their households, right? Or save even as a household. And that's, I think, where it's come to now. FinTech is relevant if it's enabling that credit, that insurance, and also the platform revolution, of course, has now also taken place in FinTech, where, how can you create digital commerce services or platforms where you connect different partners to then enable that growth?
I mean, you touched both Ms. Yolanda and Lebo. You've touched really on critical aspect of FinTech and what is happening both in at home and also in Kenya. I mean, we can learn a lot from that. And one of the points that Ms. Yolanda has mentioned, which I remember back in the hood, or from where I come from, there was that house that you would go in and you would see Umalume picking up the phone, and coming back, they would call him. So I remember that one. But going back to some of the points that you spoke about, which was around accessibility and affordability, and also just making sure that we've got appropriate solution. I'd like us to touch on a very critical point, which is inclusive. Why is financial inclusion matter today, and what are the overall benefits to society? Because FinTech is emerging as an innovative way to achieve financial inclusion and a broader objective of inclusive growth. Can you just touch upon that? And then if you'd like, we could also talk about, because you can't talk about FinTech and not talk about the gender inequality. So let's pick up on that first point of why is financial inclusion matter today, and what are the overall benefits to society as a whole?
Yeah, thanks for the question. I mean, in terms of financial inclusion, right? I mean, I guess one actually always has to break up financial access and financial inclusion. Financial access is being able to have access to, for example, peer-to-peer payment that Lebo actually mentioned at the beginning. Financial inclusion is really the deepening of services that actually enable you to grow, right? I mean, that's where we see that 1 rand is not equal to 1 rand once you've got financial inclusion, right? Because this is where people are able to get loans to grow their businesses, right? They are able to get loans to actually purchase their phones. Strange enough, I mean, a phone is an important thing. So if we look at microfinance, the kind of loans that they give anything from $20, right, yeah, to somewhere around $250 as their average loan sizes. So, and that tells you the depth of need that is there at the low end of the market or at the base of the pyramid. So if we actually are including deliberately the people at the base, yeah, of the pyramid, then we are actually encouraging our own economic growth. I mean, if I look at some of the kind of stats that get thrown around, I mean, if I pick specifically on women, right? Like out of in Africa, about 60 to 70% of women are actually in informal trade, right? They are entrepreneurs, and a lot of them are agrarian. So that means they are in agriculture, they are in allied services, or in services where or trading. So what does that mean in reality is that all their money is actually sitting under a mattress and not actually producing anything. And by the way, I mean, this passive money, I call it passive money, because it actually is not even given to someone else. Where in a bank, that 1 rand that you're not using today, it gets given to someone else to actually create jobs, to create the future that we're looking for. So from that perspective, we are actually seeing lots of knock-on impact of actually having the financial inclusion as a key part of our ecosystem. And then if we looked at, I mean, there was a study done, I think it was in Kenya actually, it was based out of Kenya, and the impact of M-Pesa. And basically it showed that you actually had about almost 2%, if I remember correctly, increase in GDP as a result of actual financial inclusion on a year-on-year basis. So so it actually, money is elastic. You know, we only see money as as sort of a piece of paper that we use to transact. Money is actually quite elastic, and the elasticity actually is dependent or is directly proportional to the level of financial inclusion in that country. So if you are in South Africa today, you can stretch your R1 because you can actually get loans, right, for a house, for a car, and so on. Whereas if you are in Ghana, for example, the cost of financing is so high that you actually have to wait until you can afford a house before you can buy a house. And you can see how that actually delays the economic development of that country. So we know for sure financial inclusion actually drives, and especially, I mean, I'm focusing a lot on the low end of the market rather than the high end. It's because this is really where we need to actually solve the problem. You talked about the gender gap as well. I mean, in Africa today, we have about, I mean, in the world, I think it's about 1.3 billion women that are actually excluded from a financial inclusion perspective.
Yes,
right?
that's all right.
And around that, about 70% are sitting in sub-Saharan Africa. So that's the scale of the problem, and that's the scale of the opportunity that we have to actually unlock the economic impact that these women can have. So for me, I mean, we've seen from the studies that have been done, especially in Kenya, that there is a direct correlation between financial inclusion and GDP growth. And we also have seen, by the way, contrary to what banks normally think, that when you actually introduce people to mobile money, about 8% of them almost automatically actually get a bank account. So actually by having mobile money, you're actually increasing the level of financial inclusion in the formal banking sector as well as part of that growth. So for me, those are the things that one actually has to bear in mind when they're actually trying to solve for mobile money or for financial inclusion. It's a long-term game that has many facets around it.
I like that. Indeed, it's a very long-term game. That's amazing that you could see the results also in the GDP. Lebo, your thoughts on the benefit of society as a whole, or you could also even pick on the gender inequality when it comes to the unbanked. What are you seeing there?
Yeah, so what you see from a gender point of view is that the first thing, a lot of the times in households, especially in low-income households, the woman is not controlling the finances, right? Is the first issue, and that creates exclusion. Number one. The other thing is that when it comes to digital inclusion, in a household, you find one cell phone, and it usually belongs to the man. Another area that creates exclusion. Right. So then digital financial services has an opportunity to create gender inclusion from a point of view of, if you get the phone, first of all, in the hands of a woman, she must own a phone or have access to a phone. Actually, it's not even owning it, access to a phone. But then it enables her to have control over her money. So the example is that if money is sent from an analog version and is sent through a bus or sent, through a family member or whatever it is, she does not necessarily always have control of it. But if she receives it on her phone, she can control how she spends her money, where it goes, how she saves her money, but also can start controlling the transaction behavior, which then can lead in the long term to her accessing credit. That's one. Another opportunity when it comes to gender inclusion is that women enterprises, and this I'm talking about, women who sell tomatoes and the small entrepreneur, is that the digital financial services can enable her to start tracking how many tomatoes is she selling, to who, what does the business look like, and give her an evidence of trade. Because the reason she can't access credit or grow her business is because there's no evidence of her trade. But with digital financial services, she can start tracking those transactions and then enable her to access credit going forward. And going forward is then even start establishing a relationship with her suppliers to even access trade finance and working capital finance, as an example. But I think where we need to take it further beyond inclusion, as an industry, we've been talking about inclusion for the past 20 years, but getting to a point of talking about financial resilience, right? We've all seen, and COVID was a great example where people may have access to financial services, but if they don't have access to enable them to become resilient, it doesn't matter. Right. And as an industry, it's moving to enable financial resilience. And that's almost been the focus even last year. How do you enable people to be more resilient, whether it's credit or insurance services? Because that's what matters, not just access.
Absolutely. Thank you for that. Miss Yolanda, there's a request in the chat to, if you can maybe repeat why GSM has introduced new ways of doing things. If you can maybe take that point again.
Why?
GSM has introduced new ways of doing things.
So is that the initial point that we were making when we were talking about?
Yes, at the beginning, when
how the GSM business actually has changed around micropayments and micro tokenization. Yeah. So I mean, I guess in terms of that, I'm not sure who missed which part of it, but I mean, one of the shifts that I was talking about was that effectively what happened is that GSM actually made everything accessible. Accessible in the sense that we started actually understanding that people's behavior and what they have actually matters. It is not what you want them to pay. It is what they have in their pocket that actually makes the difference. So if we're going to drive people access in terms of being able to call, right, we realize that we actually have to start with micropayments and nano payments. That's what we used to call them. You know, that even if someone has 10 cents in their pocket, they should be able to make a call. They should be able to buy airtime. And right now, I mean, in South Africa, for example, we can hardly find scratch cards now. And the reason is because we're actually taking out the cost. Anything that actually increases the marginal cost to the consumer to be able to access services, we're actually trying to eliminate. And by going more digital, you're actually starting to eliminate that. So that's what's happening within the GSM space. And we're doing that, by the way, with access to data. And, you know, Lebo actually earlier on touched on the issue of devices, you know, and how important access to devices is. Smartphone penetration, especially in the southern and eastern part of the markets that I serve, right? Other than South Africa and Swaziland that I'm seeing that are actually well above 50%, a lot of the other countries are sub 30%. So that is a problem in itself from a smartphone penetration, which means that these are the people that cannot evolve into the next technology of services that everyone is coming up with. And secondly, just from a handset perspective, the 2G kind of innovation, I mean, we haven't spoken about this a lot today. The 2G innovation has been the reason why people are actually financially included today. Today, you sell your airtime through 2G, not 3G, not 5G, 2G. You get M-Pesa, you get MTN Momo through 2G. USSD is a 2G technology. It's not. It didn't wait for 3G or 4G to come. So that actually is important because it talks to one of the points that Lebo made again around appropriateness of innovation. Appropriateness of innovation does not only come from the customer side, it also comes from a supply side. What are the constraints that we have? The constraints that we don't have a lot of people with data-enabled devices, but we still need to provide them with insurance. We still need to make sure that they actually are actually financially included. So one of the things that I would say to everyone on the phone, if you're an innovator in FinTech space, use the current technologies, use what is there, because Africa somehow has actually learned how to deal with, unfortunately, the endowment of having the least resources. So, so from that perspective, we actually must be more solutions and innovation driven than most probably the West is. That's why they're behind on innovations such as mobile money. I still have friends that come from overseas and they get absolutely fascinated by mobile money because they've never seen it before. They think this is the most amazing thing. So from that perspective, I mean, we actually are the ones that have to push harder, become more innovative, and actually play to our strengths in terms of finding the solutions. I mean, M-Pesa and Safaricom demonstrated that very ably. And when I come into MTN, for example, one of the things that we're doing around credit, for example, is what we call FinTech, where we're actually using mobile money, mobile data, your GSM data. How many times do you actually buy airtime and reload and so on, to actually try and give a credit score for you? Because sometimes it is not possible as a business or as an individual to have that evidence of trade that Lebo was talking about. So how do we use what we have in order to actually make sure that we create innovative solutions for the future?
Oh, that is absolutely brilliant. You actually ended on a very good high note on the credit score innovation. I think that is that is what innovation looks like for Africa, you know, solving the real issues. And I think this will definitely have long-term benefits that we've been talking about as well. While we on the topic of innovation, I'd like us to touch on the regulation aspect of it. How fintech regulation drives financial innovation and inclusion, and what is the role that government has to play in financial inclusion or financial solutions? What are your thoughts there?
Maybe we want to take that?
Sure. So regulators can either be an enabler or an inhibitor. I think in Kenya, why M-Pesa even accelerated and grew as fast as it did is because at the time when it started, regulators were not even aware of it, right? So it was almost like kids playing on the side, doing something innovative. They didn't think it would take off. And then it grew and it grew, and regulators were not aware of it. There was no financial inclusion or financial payments policy per se. And that's partly why it hasn't actually grown in other countries, because now regulators are awake and aware in most other economies, and it almost becomes a stifling block, right, in other countries. However, there is progress, right? So the other aspect when it comes to this conversation is that innovators think regulation is the inhibitor, but the reality is that the responsibility of a regulator is to create a level playing field for all and for consumer protection. That's what we forget, right? The reality is that sometimes innovators do not think about consumer protection. As much as we speak about access to credit solutions and access to loans and microloans, etc., which is fantastic, but the challenge is that sometimes innovators do not think about consumer protection when it comes to credit solutions. There's actually a challenge in Kenya with some of the fintechs like Tala Branch, who have enabled people to access credit, but have made people more indebted. And the regulator's responsibility is to make sure that there's consumer protection and that person does not become more indebted, as an example, right? And the progress that we have made as an economy, and I'll speak to South Africa specifically, financial technology touches several regulations, right? It's not just, it's payments, it's financial services, it's credit, it's technology. That's part of the challenge about regulating fintech in the continent in general, is that regulators amongst themselves must speak, which is the first problem, right? The telco regulators must speak to the financial services regulator. We are getting there, but that's part of the problem, right? That they must agree and align. And I'm sure Yolanda, as a telco provider, is aware of this. But I'll speak to South Africa. The progress that has been made in South Africa is that we now have an intergovernmental working group where different regulators are involved in that intergovernmental working group. And that in that, you have the National Treasury is part of that, the National Credit Regulator is part of that, SARB is part of that, FSCA is part of that. And that on its own is progress where they are engaging. Yeah. Beyond that is that last year, that intergovernmental working group started then. I was part of a project where they started engaging with innovators. So the project last year was, how can we enable the intergovernmental working group to engage with innovators? Because innovators need to be aware of what's happening from a regulatory perspective, but we also have a responsibility as innovators to capacity build the actual regulators. We cannot, as innovators, expect regulators to regulate in innovation that they may not understand. So somebody has to almost create that bridge, and these two parties need to start talking to each other. The actual regulators need to be aware of what's happening on the ground. They tend to be the furthest away from the consumer. They tend to be the furthest away from what's actually happening on the ground. And the reality is that innovators tend to be the closest to the consumer and solving the customer's problem. But these two people must play nicely together in order to enable these fintechs to actually scale, right? A fintech startup solving for 100 businesses or 100 consumers is not relevant, right? It does not solve a national problem. Fintech, for instance, a fintech startup that's enabling alternative lending or creating an alternative scorecard and lending to consumers or small businesses, in order to them to really have scale, they need to have scale across the country. And for that to happen, they need to have the national credit regulator allowing them to play right in the country. And we are making that progress where, for example, the National Treasury is now engaging with fintech startups to say, what are you doing on the ground? How can we help you? And the actual National Treasury is creating a financial inclusion policy as we speak, right? That's looking at all these different innovations and making it more enabling. But my last point will be, what's needed is more tiered licensing. In order to have a financial service and access receive deposits and do financial services, you need to apply for a license, right? That process, first of all, is long-winded, is very long, but it's actually also very expensive. Part of the process is you have to have a minimum capital requirement, right? As a fintech startup, you cannot afford that. In countries, generally either banks, right, obviously have the policy and the licensing, but even what's happened is that telcos have been able to apply for those licenses. In Ethiopia, in other countries, the MTNs and the Vodacoms have gotten those licenses because they have the capital to do that. Fintech startups, though, do not have the capital requirements and the liquidity to then get that license, which is an also inhibiting factor to then expand digital financial services, across different markets. So we need to get to, if there's regulators in the audience, need to get to a place of tiered licensing, right? You cannot expect a startup to adhere to the same rules as APSA and as MTN. It won't work.
You've touched on so many nuggets there that I'd like to pick up on and throw the question to Ms. Yolanda, especially around the ecosystem and the relationship between the corporates, the tech startups, and the startup community as a whole as well. How are we enabling that environment for that partnership between the startups and the big corporates? Ms. Yolanda?
Thanks for that. I mean, just on Lebo's point, because we deal with this regulation point, and I've got a famous line that I actually tell people that I stole from someone many moons ago. And he said regulators can either roll out the red carpet or the red tape. And the consequences for the country is dependent on which red they decide to roll out. And that's actually really important. It underpins really that even growth, not just in fintech and financial services, actually is underpinned by the policies that either enable it or not. So I'm going to leave that just at that point. Having said that, there are regulators that are more progressive. Rwanda has a very progressive regulator, for example, where we saw like accelerated kind of adoption of services as a result of regulator last year actually taking specific steps in the market to actually facilitate that. And also what we see in countries like Uganda and Zambia and the likes, you have what you call regulatory sandbox, actually recognizing exactly what Lebo was saying, is that the innovators are close to the customer, and yet the regulators are so far behind in terms of the process. And basically, the regulatory sandbox is a space and a kind of teaching almost environment where you walk toe to toe with the regulator as part of your innovation cycle as well. So these are still new concepts, and we are implementing them, but it was going to take time. So definitely going in the right direction. When we'll get there, and will we ever be happy? No, because innovators are always a number of steps in front of the regulator. So I just wanted to make that point in terms of the regulation, just to underpin that. And then on the ecosystems, I mean, our corporates working with fintech startups and other innovators in general, right? Because while we talk about fintech here, finance actually touches everything, right? Everything that you do on a daily basis is a transaction of some kind. Whether we are sitting now on Zoom or whichever webcast platform, someone has to pay for it, and therefore there is a financial transaction that actually happens as a result of doing that activity. So corporates are actually trying their best to actually incorporate new startups in what they do. Is it enough? I'm not sure. We all have sort of, for example, hackathons that recognize this, that says, actually, how do you innovate around the products that I have, for example, right? And the whole thing around business models is actually becomes really important, because we are slowly, as corporates, slowly, and I'm saying slowly, underline, slowly, actually changing the way we think about our business models because of what's happening in this space. And our business models have always been obsessed with competition and ownership. And now we actually have to pivot to something completely different called access based on trust and cooperation, right? Someone has an element of my value system. Am I happy for someone else to do that I don't control? And slowly we're getting there. So if I look at our fintech business, where we have insurance, where we have normal mobile money, where we do peer-to-peer, where we do lending, where we do e-commerce, and so on, right? If I look at that, that is an amalgamation of a lot of partnerships, right? No one actually, everyone is starting to realize that no one has a monopoly on ideas and innovation, and that innovation is actually fairly widely distributed. And basically, we need to find a mechanism to actually have a ecosystem or a way of discovering that makes it easy. And that's why there are people like Lebo here on the call that actually keep on uncovering these gems of companies and actually enabling a lot of guys to actually scale up a little bit. So from a ecosystem perspective, I think there's still a lot of work to be done with innovators. Right now, innovators are still doing small scale innovation, right? They are not able to scale. And the reason they're not able to scale is because we as corporates are not working in tandem with them. If we're working better in tandem with them, they would be able to scale, to be honest. Because as Lebo said, in fintech, where you're actually making so little per transaction, scale matters. You can't be serving only 100 people. You can't be only serving 1,000 people. You actually have to be serving millions of people ultimately in order for you to make real money.
Oh, can we have this? Can we just extend this time? Oh, I wish we could. I have two more questions to ask Ms. Lebo and Yolanda in terms of the disruptive technologies that are currently happening, be it the cryptocurrency, national digital currencies, or the NFTs, and virtual digital cards from AI and blockchain. In your opinion, how is the continent embracing these disruptive technologies? To you, Lebo, or Miss Yolanda? In your
to Lebo.
Lebo. What are your thoughts?
There was, about 3 days ago, actually, here in Kenya, we were having a conversation with somebody that 3 years ago, we used to talk about blockchain and cryptocurrency, and I used to talk about it in a lot of different places. It was this new innovation and how blockchain is going to change everything, right? And a lot of us, dwelled into how we understand the distributed ledger and how it creates transparency and enables, connected services, etc., which it does. Right. But I genuinely think we're far ahead before we get there. Because the reality about blockchain, and we also like trends as a industry, right? It's FinTech, and then it's blockchain, then it's cryptocurrency, and cryptocurrency is on it's a side, it's different. But I'll first talk about blockchain. The reality about blockchain is that it needs all the stakeholders to agree for it to work.
Yeah.
It needs all the stakeholders to, first of all, be part of this blockchain in order to create that transparency. And when you have societies or stakeholders that, first of all, don't want to work together, it's not going to happen, right? Even transparency, the main impetus about blockchain is transparency. But when you have businesses that don't want to be transparent and don't want to show their transactions, you're not going to get there. It's not going to happen. But another side is that when you still have an ecosystem of markets that are struggling with electricity, how will you implement blockchain throughout the countries? Let's, so that's all I have to say about blockchain. There are lots of use cases, but the practicalities and the implementation of them is what matters. What problem is it solving? That's where we need to focus on. Cryptocurrency, on the other hand, in markets where there isn't financial services, there is a lot of value to cryptocurrency when it comes to cross-border remittances. The reality is that cryptocurrency enables transfer of payments and cross-border remittances. That's the reality, right? In countries such as Nigeria, cryptocurrency has grown in leaps and bounds. However, the regulators are becoming aware in how serious this cryptocurrency is. Before, they allowed everybody to have a crypto wallet, and you could have cryptocurrency. I mean, you have wallets such as Luna in South Africa, and people may have wallets and exchange. But the minute it started growing, regulators said, hold on, what is this thing? And in some markets, unfortunately, Nigeria being one of them, they've clamped down on cryptocurrency. Right. However, in some markets, even in Asia, they're even creating a national digital currency. So some markets are accepting it as a national currency, right? Or a national currency being cryptocurrency. And some markets are just like, let's see where this goes. I'll leave that. Yeah, I'll leave it there for now.
No. Ms. Yolanda?
Yeah, I guess on the point of the sort of these disruptive technologies, it's always interesting, right? In terms of, I mean, I always go back to sort of first principles. Let's put it that way. And why do we have money, and why does money work, right? Money works on two bases. One is predictability. The second one is acceptability. So if, for example, you go to the US today, and you have your 100 rands, South African 100 rand, and you give that to someone else, right, to try and pay, they will not accept it, right? So that's the acceptability kind of element. The second part is the predictability of value, right? If I buy something for 10 rand, right, that is worth 10 rand. So if I buy a car today with 10 rand, it's worth 10 rand when I get it, right? A week from now, it's more or less still worth 10 rand. However, with crypto, right, one of the biggest challenges that we need to solve is really this idea of predictability. I can't tell you today that you've given me a service, right? And I owe you, let's say I owe you 10,000 rand for giving me a service, right? And I say I'm gonna pay you in crypto. I pay you, but tomorrow, right, that 10,000 worth of crypto is now with 3. What is the likelihood that you're actually going to accept that? Because of this lack of predictability, actually this becomes a problem. And that's where we actually have to be clear what problems are we trying to solve. Around cross-border, it works only if you are actually able to create that seamless transfer of value that is similar. It doesn't have to be the same, similar, right? And what we see in cross-border is that if it's stable, all good. If it's not stable, people fight, right? They're gonna say, I sent you 10,000 rand, and you said no, but I only received 3,000 rand, right? So those are the kind of things that we still have to solve for. What is the reference asset that this would be actually talking to? Maybe is a way to actually solve it, but right now we actually haven't reached there. Is crypto though a solution that can solve many problems? Yes, including cross-border. Today, in order for you to actually transfer money to a friend in Kenya right now, I've got a friend sitting called Lebo who's in Kenya, and Lebo there wants $100. I send her $100. She receives it as a token in Kenya. She cashes out 100,000 without going through the Reserve Bank, without going through all the pain and rigmarole that we normally go through. I think that's a fantastic kind of innovation. NFTs, my God. I mean, guys, there are things that my generation must just walk away from and accept that, it's not for us. I do not understand how a tweet can cost that much money just because it's an NFT. I really, really don't. I think NFT, I might be wrong. I think that is just a bubble on its own, to be honest, that is actually being created by people. There's only one thing to remember about any kind of fads to anyone who does investments and who looks at these kind of stuff is that what the wise do at the beginning, right? The foolish do at the end. Unfortunately, that has been a consistent theme on over a lot of stuff that has happened, from the stuff we know about pyramid schemes to investments that have gone bust and so on and so on. So that's the only thing, that's my only caution. Just get into stuff that you fully understand. I don't fully understand NFT, so I don't actually play in that space. Blockchain, I agree with Lebo there, that we need to find the right use cases. The use cases are starting to be evident. However, if you actually have a system like what we have in Africa today, where connectivity is not guaranteed to a cloud-based solution, right? You might as well not have a solution, because it means that every time you try and actually do a transaction or verify something, then you will not have access to the technology. So we are a little bit away from a universal adoption of blockchain. I don't think blockchain is the only technology that will be there. There will be multiple around the same issue, around transparency, and also around ownership. Remember, it's also around ownership that we actually have some of these technology. So actually, when you innovate, this is the only thing that I'm going to say to anyone on the call is be clear what you're trying to solve. There are hundreds of ways to solve the problems that we have, but be clear on what is not the small problem, the big problem that you're trying to solve. And then you actually are going to be able to make an impact within the space.
Oh, thank you so much. I think, I personally thoroughly enjoyed this session. Listening to you, Miss Yolanda and Miss Lebo, has just been absolutely phenomenal. We're slightly out of time. What I'm going to ask you to do is maybe 30 seconds each. What are your final thoughts around FinTech? I mean, if we had to give you maybe even a crystal ball and say, how is the future of FinTech, or what does the future hold for FinTech? What will be your thoughts? What do you imagine? What do you imagine looking forward?
I'm leaving to Lebo first.
like crossing this wall. Anyway, I won't talk about the future per se, but what I will say is about keeping it simple and having use cases that work. So sometimes when we think about digital innovation, it has to be better than money for it to actually scale. Money is tangible. Money is you know how much you're getting. If I give you 10 Rand, you receive 10 Rand, right? Number one. Number two, you know where to use it. you know where it is accepted, right? That innovation, whatever innovation you create, has to be better than money for it to scale. I'll make an example. PayPal, the reason PayPal works is because it's used and accepted throughout the world. So your innovation should have to be accepted everywhere for it to then really scale, not to focus on what's the latest thing, NFTs, the latest thing, what's the latest trend. But if it can't be used anywhere, it doesn't matter. We'll just talk about it, we'll read about it, write about it. But if there's no use case, it won't actually grow the bank account and the business model.
Thank you for that. Yolanda, over to you with your 30 seconds.
Thank you very much. So, I mean, at MTN, we have this core belief that everyone deserves the benefits of a modern connected life.
Yeah.
And for me, financial inclusion is core to that. You know, I start off with connectivity as being core, and then financial inclusion is the next big pillar of that. So if we're going to create a vibrant and economically viable Africa, we actually going to have to solve for the lowest common denominator in our society. Solving only for a slither of our community, of our society, is not what's going to change the game. We need game changers. We need people that are going to go out there, innovate at scale in order to make sure that we can actually truly have the benefit of a modern connected life. Otherwise, we will still be here talking about the same things if we actually do not change our mindset to say, actually, I don't want to innovate in a little corner. I actually want to innovate, you know, rather actually fail spectacularly than to actually win in a little corner somewhere. That's my philosophy around the digital space as well as the financial space. So really, guys, I mean, my last message is really around what I said about the business models. The business models are changing, corporates are changing, governments are changing in order to actually accommodate innovation as a key driver of success in the economies. So you have to ask yourself, what am I doing to take advantage of this changing dynamic? It's a little bit like when PE started, right? A lot of people were busy sitting there criticizing that you were an affirmative action candidate, that you were appointed as a, and they forgot that you got the opportunity that someone else didn't get, right? So you had an unfair advantage. So let's use this kind of unknown that's happening and this shift towards innovator and people being embracive, governments being embracive, regulators being embracive, corporates being embracive of innovators as a tool or as a mechanism or as a point in time where we actually let innovators actually shine through and actually also make the businesses and governments actually believe that these kind of access-based and collaboration-based business models actually also can work. And then we can finally displace people that are old like me with new thinkers and new innovators like yourselves. Thank you very much.
Amazing. As they say, collaboration is a multiplier. Amazing comments from the participants. The future of FinTech is amazing. This was very insightful. Thank you. Thank you for sharing your knowledge. Very insightful. FinTech will change the world. And Zinhle is mentioning as well that Instagram is about to roll out an NFT feature. So maybe we'll buy your NFT post, Miss Yolanda or Miss Lebo over there. But thank you so much. I cannot even begin to express the words of gratitude that I have towards the speakers, the YLC team. You are absolutely phenomenal. The team, the leadership, Miss Charmaine, Miss Triforsa, and the whole team, thank you so much. And also the participants, thank you for Wednesdays really setting it aside to spend time with us. In terms of the next steps, please keep the conversation going. As I've mentioned, we are on LinkedIn, Twitter, Instagram at YLC Ideal, hashtag digital conversation. And you will be receiving the recording of the session. And I hope you have found the session super valuable, just like I did, and it has just been an honor. Thank you, thank you, thank you. With that, I would say good evening, and I will let you go unless Ms. Charmaine would like to say last words, or anyone from my fellow team members at YLC.
Thank you, Matapelo.
Thank you.
Thank you. And
Okay.
good night.
Oh, thank you. Let's keep this conversation going. Absolutely fascinating. I appreciate it. Good night, and please stay safe and keep warm. I hear it's cold at home.
It's at least gotten a little bit better now.
Oh, that's amazing. That's good. That's how we want it. Bye.
Oh, thank you. Bye, everyone.